Nugent on the beat. It's the rundown, everything you need to know. It's the rundown, everything you need for sure. It's the rundown, and I ain't even capping on this. Crypto blood covering every topic on this. Welcome to the show, who didn't let me go? Breaking down the facts, there's more you need to know. Crypto politics and culture, always keep it real. Teaching you the truth, showing you how I feel. Stay informed with me, and I break it down with ease. Every single day, bringing expertise. Current events and trends, I analyze with care. Knowledge is the power that we all can share. Yeah, y'all, hit that like button. Share the stream, and join the team. And you already know what the fuck going on. Shout out to my nigga Crypto Blood.
Yo, it's Crypto Blood, Detroit flow, streaming from the D, knowing what to show. Indicators are wrong point, OG since 12, invested in trade, living life like a pro. I'm Rucker, Jerry, and just Bloods do. Bad motherfucker, but in a good way, boo. Got my eyes on the charts, ain't no time to sleep. Kick that money, gotta keep it creep. That's why Crypto Blood, Mr. Toast is on the line. Stacking my coin, got the market on my mind. Bitcoin, Litecoin, Ethereum too. Cash is king, but I'm looking for a new move. I know the culture of the markets like the streets. Got my finger on the pulse, can't nobody beat. I see the trends, I see the flow. Got my strategies in place, you know.
Yo, it's NYBZ on the mic, coming through the mist, talking crypto and privacy things you can't dismiss. YouTube's wild jungle, I'm the lion, can't resist. Guiding through the blockchain, teaching about the risk. Mind your biz, don't miss. Eeny, meeny, mighty biz, we on the privacy blitz. Except in the mix, dropping knowledge with no tricks. YouTube to the wallet, keep it tight, no links. Click clack, I hack the facts, that's how I attack.
And we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live. Okay.
We are doing it live. Welcome to the show. Hope everyone is doing well this morning. We got a packed live stream today. None other than my guy Mike from RTD is back with us to give us an update on what's going on with the silver market. We got slaughtered overnight. I saw a video that he did, and we'll play a snippet of it once we get him up on the stage. I actually like the angle that he's going with in regards to like some of the shortages and some of the silver and gold dealers and how that model might be changing. I really like that angle. So we're gonna get into and have him dissect that a little bit more. Hit the like button as you guys come in. Unfortunately, I do not have my damn soundboard working correctly today. I don't know what's going on with that, so we won't have any soundboard activities today. But again, hit that like button on the way in. Make sure you show me some love in the chat room as well. Let's get this stream hot and ready like a Little Caesars pizza. All right, without further ado, let me see if I can bring up Mike on the stage here. Let's see what we got. Mike, what's going on, brother?
How you doing, my good friend? I'm good, man.
Good. Glad to get you to come on today, man. We got some historic moves in the precious metal markets. Bitcoin's continue to bleed out. We'll talk about that a little bit. But kind of give me your overall assessment of what's going on in your opinion.
All right, man. Well, once again, thanks for having me on. And I just got done doing a little rant on my side. I had to get some stuff out of me. So, yeah, silver, man, like, the more we are, I guess, forced to pay attention to these price swings, it becomes obvious that everything is coordinated and there are no coincidences. And so silver, once again, I'm boiling it down to the fact that silver is the most important metal that mankind has ever utilized, and it's becoming obvious because there's so much activity happening around it. And so starting yesterday, I saw something to the tune of $1.8 trillion in gold alone, 8% market correction in silver, all that stuff never happens in normal market activity. So clearly something is happening behind the scenes, and it has everything to do, I believe, with the paper and the physical decoupling. And it's more so a coordinated effort, I believe, in conjunction with Asia. And so there's been lots of reports that a lot of the trading desks have repositioned themselves out to Asia, obviously to make sure that they are part of this reset transition in the monetary system, I believe. But when we have, global systemic important banks, i.e. JP Morgan and the like, going long and getting physical silver, clearly right now, especially what I'm seeing this morning, the idea of them raising the margin rates again within the futures game, that only further shakes out smaller hands. So literally we're witnessing the shaking out of the players that they mean the big honchos, the global systemic important banks, the players that they don't want sitting at the table. And so as a result of that, we're going to see lots of volatility, because all this increased margin activity, it forces sellers to have to liquidate a lot faster. Therefore, it makes it appear as if the price is dropping. But that's just in the paper game. The physical game hasn't changed at all. It's only gotten tighter. And so I mentioned about, like, right now, it was at 99, it's $95.93 on my screen. I'm like, try to go somewhere and buy some silver for $95. Nothing changed. It's just how we view numbers on a screen centered around the futures market. So literally, it's this unraveling.
Yeah, because it just is no way that much silver could have physically been sold.
Correct.
It's a paper move, in my opinion. That's how I looked at it as well.
Digital illusion. That's all it is.
It's an illusion. I want to play this snippet or a little bit of this video that you put out, I think last night. I saw this. Let's take a look at this, guys, and then we'll get Mike's opinion on, or he can expound on this, what he's talking about here.
In coin shops around the country, people walk in ready to sell their silver and gold, and the shop says no. Not because metal isn't valuable, not because demand is low, but because these shops, the same ones that used to buy every ounce they could, suddenly have nowhere to send it. So the question is, what's going on? And I believe it has a lot to do with the idea that gold and silver were never meant to be sold as a product to keep businesses open. Because gold and silver are money. We're not sure how much longer coin shops will be able to viably trust exchanging paper for real money. And that's something worth touching on. We'll try to paint a narrative to give you an alternative spin on things. So as always, if you find value, then I trust you know what to do with it. But let's just jump right into it. Not many people know that refiners are actually the hidden engine that keeps this whole thing running. So behind every coin shop, there's usually a refiner. And when shops buy scrap silver, whether it be old jewelry or even excess bullion, they typically sell it to a national refiner. So these are companies like Ashi Refining or Harris. They melt it down, process it, and turn it into new bars and rounds. But right now, many of those refiners are slowed down or stopped buying altogether. And some aren't even taking new silver. Others have delayed payouts for gold, stretching what used to be same-day payments out to 10 or so business days, sometimes even longer. And here's the kicker. Some refiners won't even lock in a price when you drop it off. And there lies the problem. As a business, if you can't lock in an actual price for the product you're looking to sell, you have to ask yourself a question. Is it really a product? Because with all the volatility and the ups and downs of the gold and silver price, gold and silver in and of itself was never meant to be solely priced in USD terms or Federal Reserve notes, as I like to refer to them.
So that's excellent point, man. I never thought about that. I did see a video that Voice Crypto, my guy, put in the YouTube Premium Telegram room the other day about some of these gold and silver sellers having issues and not accepting new inventory. Like, they're not purchasing from people coming off the street. And I'm wondering from you if that is possibly a strategic move by the government to slow down things. Are they going to the refineries and doing some backdoor whatever to slow them down?
Yeah. Okay. So that's a good angle right there. And so I would say anything's possible. And knowing how our government gets down and knowing all the activity we're witnessing right now, what better way to, I guess, minimize or control the exit and the entry point?
It's almost like choke point 2.0 or 3.0 for precious metals. That's what I thought when I watched your video. I'm like, wait, this could be the government choke point. This could be choke point 3.0.
100%. And so the way that you put it like that makes it helps it make more sense, given that, the goal, I believe, is to make sure that there's minimum exits out of the system and to keep
Right.
everything contained in the system centered around the Federal Reserve note, aka the dollar. And so I'm a firm believer that our government does not want the people to profit and to prosper in the midst of a reset. So what better way to discourage and minimize the gate exit ways that they can't see? And so I mentioned in the previous video how I would be surprised that more coin shops are, I guess, forced to close their doors due to governmental pressures, and or they won't have banking access. They might be debanked. And so if you got limited access to cash to be able to do business back and forth, that means that there's less market activity for people to get out. And then you factor in, for those that, this is all speculation, of course, for those that want to remain open, want to keep their doors open for business, they'll have to sign up and log into a government database type of center, show who's selling, who's buying, how much, and weight and stuff like that. They walk out the door.
Didn't think about that either.
So it's like a physical, it's like a KYC, but for metals. And so those are all things I think are probable, just because in the midst of a reset, anything goes. And so
anything goes. Yeah.
We'll find out to the extent.
So remember last week or a week ago or 2 weeks ago or something like that, there was rumblings about individuals being blocked from wiring money to institutions to buy silver and gold. Did you hear about that?
I heard a quick snippet. I didn't get any details about it though.
Yeah, it was a lady that worked for, I think she worked for SD or SD Bulling or
you talk about ITM trading.
ITM trading. That's right.
I saw a little bit of that. Yeah.
Right, and she was saying that they were blocking wires coming into their company. So I'm thinking that was Operation Choke Point 1.0 for precious metals. That didn't work. So then they had the Institute 2.0.
It's gonna be tears to this, man.
It's gonna be tears, right?
But think about this. Who's at the heart of all this? It's the banks.
Yeah.
And so the banks not only impacted the movement.
JP Morgan, probably, to be more specific, right?
100%. And and that's the thing. Like, it just, when you think about all these things, you connect dots. It starts to make sense. Like how all of this can be coordinated. You know what I'm saying? Like an intentional activity driven to control operations as we move into this future they have in store for us. So yeah. And so what she was talking about is the big money. You're wiring big money. Right. We're not talking about nickel and dime hand, paper transaction. We're talking about big money. So they're trying to keep the big money out of it. Clearly, that's an idea that they don't want people to really be able to protect themselves and preserve their purchasing power and physical metals, especially. So, yeah.
What's your thought on, with the U.S. Mint, and again, you're more of an expert in the precious metals than I am, even though I will be changing my name to Bullion Blood really soon. But I want to know, what's your thoughts on this, right? U.S. Mint repricing Silver Eagles to 173. Is that kind of a harbinger for where spot price could hover around? Like, is this a future price that we could stabilize around, or what are your takes on them doing this a couple of weeks ago?
Okay, so I think this is heading in that direction of giving us a more real-time price discovery. Yes. Only thing I have about the U.S. Mint being being, I guess, labeled as a price setter for where we're at now is the fact that the U.S. Mint is the authorized issuer of United States money officially. So because they don't have real price time market activity on their website, like nowhere on there does it tell you the spot price, because they've never been in this business before. They just provide the American citizens the way that they're supposed to with American coinage. But now, by them putting this out here, this is for a silver proof, meaning that this is not the typical bullion that you would actually acquire. This is like,
that's what I was wondering.
Extra shiny. This is the extra shiny for numismatic purposes. That's meant to sit on a shelf in a case somewhere. That's not something that you're gonna actually that's not something that you would actually want to use in transaction if you had to. You would want to use just a generic circulating type bullion rounds. Those are more the ones we'll get, in the tube or something like that. So that 173 is a greater markup because it's conditioned and treated.
See, okay, see, this is what I was wondering. Is in the past an American Eagle from the Mint the premium? It's a premium.
They were always higher. They were always higher because it's more numismatic than it is actual anything to do with the real world usage of a $1 coin.
I got you.
That's still a $1 coin.
So, what was typically the premium or spread on a numismatic like Eagle from the Mint? What was typically the spread?
That I do not know because I never, prior to now, really paid attention to it. Just because the U.S. Mint was never really a part of the equation, other than them having to supply however much silver and gold that was needed by the public. That's all I really cared about. The price was irrelevant because whenever I would go buy it from somebody or buy it from a dealer, it would be what they pay for it plus their premium. And so up until now, it was always according to, like, say SD Bullion, for example, when silver was readily available and there was no problems around it, it was, silver Eagles were always less than $10, or what was that? That would probably be well less than 10% of what the price would be at the spot at that time. And so that was always a leading, I guess, a price that we would use for silver. And then, of course, you go generic, which is always half of what that would be in terms of premium. So literally, if generic silver back in the day, I remember, was, say, $5 over spot, an Eagle was $9 over spot. I was like, man, that's high. I would rather get the generic stuff then, unless I really wanted American coinage. But now the premiums, are whatever, as I say, whatever it is when it's time to check out, because it's going to vary according to different dealers in accordance to what they have in inventory. So some dealers are cheaper than others, but believe me, if they're selling it at today's price, they're definitely going to lose out, because by next week, it's good to say that price is going to be higher. So this is where I get into the idea of selling gold and silver. Selling gold and silver is going to become a bad business model, because
I like that angle too that you said in the video. That made so much perfect sense.
We've
so explain that to the audience.
Okay, so gold and silver in modern times has been categorized as a commodity. And so I love infographics. So I put together an infographic charting the entire history of our monetary currency. And it wasn't until the gold standard, quote unquote, ended with the Nixon removing the gold, closing the gold window. That's when we went into the transition of gold and silver being a commodity that's tradable in the futures market, which started in 1974. So prior to that, in our grandparents' mindset, gold and silver was money. It wasn't until we got into modern times when we went on this digital credit card, unlimited debt, fiat Ponzi scheme of a system, did it become a tradable asset known as gold and silver on a commodities exchange. So my point is, 100 years ago, 200 years ago, if gold and silver was in circulation, it was just money. And the paper that we used were receipts. So you would redeem those receipts and get your physical. Now we're back to that point now where, because gold and silver now, I believe, and should be considered as money, you should look at it as to how many paper receipts do you need to redeem in order to get that. And that's where the whole idea of a gold and coin shop, those didn't come about really until the 70s and 80s, where gold and silver was allowed to be sold to the people for Federal Reserve notes. And so that business model, I believe, will come to an end this decade, because as a business, you realize that you're taking in debt IOU nothings that could be printed out of nowhere in an unlimited amount, and you're giving something real and tangible that's scarce, i.e. gold and silver. So outside of keeping your lights on and paying salaries and inventory to run your business, you have to ask yourself a question like, is this business worth maintaining when I'm giving something of value and I'm getting something that is not going to be of good use to me beyond what I do with it, whether I spend it and however, because you're not going to be able to save it for much longer in volume because you're losing out by holding it. So that model, I think, is going to be questioned.
Yeah, I think you might have said in the video, like if silver is at $1,000 a coin, and someone brings a silver coin in to sell it, that's a lot of money for one little coin you got to have a whole bunch of cash on deck.
Mm-hmm.
It just doesn't, like you said, the higher the prices go with these ounces, these precious metals, the worse that business model looks.
Correct. And then you add in the bank choke point 3.0, as you mentioned, like where you may not be able to go access cash in your own bank account to be able to transact your day-to-day operations. You're in trouble, and you're not going to have $1 million back in your vault in the back, because that's a risk, security risk. So what do you do? You know, so
right. That was a good point.
As I'm saying all this, what else comes to mind is this push now for tokenization, and so with Tether and their gold tokenization, and then of course Peter Schiff now is jumping on board, basically re-hyping up his gold tokenization. It wouldn't be too far-fetched to say, don't worry about the risk. Park your gold and silver here. Use these tokens to interact with, and that'll be a good way of minimizing the security risk of having too much paper and stuff like that. So it'd be an easy sale by the banks, once again, to say, park your gold and silver here, take these tokens, and you can use these tokens in commerce as money. So they went from gold and silver to paper to digits to gold, not enough paper, and now we might be going back to digits. So, man, it just seems like everything's intentional in a sense, doesn't it?
Yeah, for sure. Shanghai prices came down as well overnight. We're sitting at around 123. Though the premium is pretty darn high. If I do a refresh, we have a premium of $19.17 over in Shanghai. So that's a pretty good. It's actually bigger than that, because we're now at $94 a coin over on COMEX.
Let me give you something else to check out.
So it's like a $30 spread, which is insane.
Watch this. I'm gonna share a better. Let me see if I can put this in. Can I share something with you?
Yep.
Let me. It says private chat. I'm about to put this. So use this now. Use this from now on, man, as your, I guess your analysis tool, because it gives a much better and clearer idea as to the divergence in price from 3 locations, including India. And so if you look at the Shanghai spot, as it said, there's 122.50. The premium is 28.55. Then you go to India. India is 112 right now, which came down significantly from the last time I just talked about it, and its premium is $18. And so you mean to tell me both of those countries deal with physical, and we're dealing with paper, and we're supposed to believe that 93.95 is what is reality? So yeah.
And so this is the thing. If the price over in Shanghai and in India are truly what it is, our spot price, our COMEX price over here is going to have to, it's like a magnet. It has to come back to that. And the way that happens is if through arbitrage. It can't be at 30% for too long, more than a day or two, because people will, with big money, will have the ability to exploit that margin, that delta, right? The arbitrage there, 30%. That's a big spread, man. Even if you can't get all of it after transmitting it over there and all of that, let's just say you get 20% or even 18% after it's all said and done. 18% on $1 billion, you know, is 180. What is that? 180 million dollars.
You play with big numbers, but here's another thing to consider as well. And I saw, I think I'm not sure if I read this or saw this, but the idea of typical market situations where arbitrage is common might also be coming to somewhat of a standstill, because if there is a real physical shortage or willingness to let go of the physical for these contracts, then the silver may not be flowing as much. So I could see there just being like some big players that say, hey, we're not delivering, or we're not going to be able to give you as much as you want when you want it. And so this plays into another post. Let me share this with you that I came across today that kind of hints at that. And this is out of Asia. And so are you familiar with, there's an Asian gentleman named Bo Bao or Bo Jianjing. I know I'm butchering it, but
Don't
He
tell me it's the AI guy now.
no. This guy's legit. I reached out to him. I tried to get him on the show to interview him,
Yeah,
and
but you didn't.
but I didn't. True. And so once again, take it with a grain of salt. But before we had all these other Shanghai benchmark price mechanisms, he was posting actual activity before all that. So the
Okay,
fact that he was
gotcha.
giving us actual spot prices will let me know that my man is closer to being sincere with his than just AI guy. So
Let's
but
see
but
here.
the Asian guy is definitely tearing it up. He got 30 YouTube channels and
Bro, Mike, man. And every one of them doing 30,000, 50,000
easy.
views. What the bro? I'm like, I need to get on that
Right.
whatever he's doing, I need to do.
That dude. It's
All
I was
right.
thinking about the other day, man. That is clearly a team of individuals using AI. They got bots. They
Yes.
got everything
Yes, they
operating.
got
It's like
bots. Yep.
one person per account, but
I
their
can't get
job is to pump
bro,
out
I
video.
can't get rid of them. Every time I say don't recommend this channel, the same video comes up on a new channel.
With a different look and
YouTube.
everything. Oh my
What are
goodness.
y'all doing? All right,
It's
so we got Bao Jing
right.
Jun here. So tell us about this now.
Okay, so this gentleman here, he's an older. I mean, so in my communications with him, it's all text. He appears to be an older gentleman in the heartland of China, and his background is something to do with the markets itself. So the fact that he's able to give this information is take it with a grain of salt. But I don't think he no longer lives in mainland China. I think he's on the outskirts in one of Hong Kong or something like that, to where he feels comfortable speaking freely. And so he has been putting out them blue reports there, which are renminbi prices converted over USD. And so weeks and weeks ago, when I first discovered this, I was talking about just focusing on the renminbi price. So as you can see there, silver closed at 27,000 renminbi, which it's been ticking up. I've been documenting as it's been ticking up, and sure enough, when we convert it to dollars, as you can see there, it was 123.21 when the benchmark closed out in Asia. And so what he's been doing is keeping us up to date in real price activity. And in the red there on the screen, it shows the actual weight that's leaving the vaults, because they only deal with physical, none of that paper stuff. The paper is what helps set the price, but when you want to cancel or when you want delivery on those contracts, they have to give you physical. So the red shows you how much is leaving the vaults. But in this report here, he's basically talking about some stuff happening behind the scenes there as well, when it says accumulating gold withdrawals and available for sale gold bar vaults have been reset to 0. And so I'm thinking,
What does that mean?
outside of not knowing what that means, I'm like,
Okay.
it sounds like there's some similar activity happening as to what we're witnessing here in reference to shaking out weak hands. And so then it goes on to say, no guarantee time of specific delivery. So I would assume that because the vaults over there are getting drained at an increasing rate, they will then begin to delay the delivery times of a lot of the things that people expect to receive. So if that is true, then that's going to be more price pressure upwards that will keep this gold silver rally reaching new heights that we can't imagine, because it's going to create uncertainty in the Asian markets if there's a concern of not being able to get delivery within a decent time frame. Because as of right now, delivery is supposed to be guaranteed like within a whatever short time frame. But if they're talking about extending this, that sounds like some COMEX, CRIMEX type stuff, where they throwing all this uncertainty out there, which will drive people to want to, go get more physical, I believe. So we'll see.
Let's see what this guy here says. He asked Grok to explain this for us, so that's great. I love this AI and this age of AI we're in is amazing. So he says this post reports that many gold and silver mining stocks in China dropped sharply. It also claims major Chinese banks have depleted available gold bars for immediate withdrawal or sale, requiring a 1-month advance booking with uncertain delivery. This points to high demand or supply issues of physical gold. Wow. My searchers confirm stock drops and gold frenzy, but not the exact bank vault reset. Could be unverified news. Okay. So that gives us more context around what he's saying there, and it is sounds like what you were saying basically. Physical is
So,
drying up.
yeah, just the demand's there, but the supply is not available. And so once again, if it's unlimited, then we wouldn't have all this confusion because you just get what you need. But because literally somebody has to have the vault, someone has to have the metals in order, to fulfill these contracts. I can literally see a lot of these contracts being non-performing contracts pretty soon, to where, somebody's gonna be on the hook, and you better believe it's gonna be the small banks. They're gonna be taking the blame for this, and the big boys, once again, the big boys will win again probably. So,
Right.
yeah.
So, Mr. Tequila says LBMA and COMEX are empty and most likely running on just-in-time delivery system to fulfill current orders. And again, this could be the case, i.e. my theory or thesis is that this is why we potentially could have, and this is just my thought, our government intervening at the refiner level now.
100%.
You know,
100%.
to slow some of this down potentially. So
No.
that is go ahead.
No, I'm saying to add more to this, what I was thinking is I do believe crypto is a part of the Western's future as far as the attention diversion. So I saw a post that with Paul Atkins, the SEC chair, mentioned that, or it was reshared because there was an older comment, but he touched on it again, saying that now could be a good time to open up the 401ks. There's 12.5 trillion sitting there that the American public, should partake in, type of thing. So I wouldn't be surprised that we see some type of crypto rally whenever they are ready. Because mind you, as I mentioned before, crypto and Bitcoin in particular has already been captured. So now it's more so like they cut the switch on when they're ready, and it has everything to do with the Clarity Act and stuff like that. Once that stuff is ironed out, sure. But I believe that there was going to be so much excitement around the digital asset space that will be done intentionally to cover up anything that people think they're missing out with gold and silver, because the race in crypto might be so much greater once they tap that 12.5 trillion plus some, and that's not to mention all the currency that's going to come in the days ahead as a result of just trying to keep this banking system afloat. So it's going to be crazy out there, man. Like it's
Shout out to Jeremy Wedlow. I was talking to him the other day about we were doing crunching numbers about a repricing of gold. And so I went and found out how many tons of gold Fort Knox has, allegedly.
Supposedly,
and we're priced at what, $40 an ounce?
The actual the statutory is 40.25, I think. Whatever, yeah, I think 35,
40,
42, something like that. 40, 42, something like that. Yeah.
I'm gonna play that in the 4-digit, ladies and gentlemen. I'm gonna play that in the 4-digit. 42, 40. Let me get $100 on 42.40. So we did so what would be the benefit of, what's the benefit of keeping the statutory price where it is at 42.40? I don't understand that.
So okay, let me see. Give me a second. I got a book here. Shoot. Where's it at? Okay. I have a book by Jim Rickards that talks about gold being a asset. So gold, after all the stuff happened back in the Great Depression when they confiscated gold, whatever, we know how that stuff played out. Gold certificates were placed on the Federal Reserve balance sheet as an asset to them, and in exchange for the gold being held in the Fort Knox vaults as well as New York. And so as a result of that, the set price, when they revalued it, when they took it from the people at $20 and revalued it to $35 or something like that, and it was immediate loss right then. Several years later, I'm not sure the time frame, it was revalued again to that 40, whatever it's at now, 40.22, whatever it might be. Gotcha. And so as a result of that, it was always listed on the Federal Reserve's balance sheet as whatever that number was, 40. Somebody let us know.
Let us know in the chat, guys, what that number is.
Whatever that dollar sign is, that's what shows on the Federal Reserve balance sheet today as their asset in gold certificates. So the gold certificates exist on the Federal Reserve balance sheet today at that dollar price in total for the amount of gold that was taken from the American public. And that's what's on the Federal Reserve balance sheet, that amount of gold in gold certificate terms. So that's their asset. But the United States, on the other hand, we got the physical gold in the 8,300 tons, supposedly, that's in Fort Knox and in New York. So you have paper gold in the certificates and physical gold in the vaults. The question is, who really owns what? Because if the Federal Reserve, which is a non-government entity, whatever, has captured our government entirely, and they have certificates saying that they have title to the gold, but we're just holding it on behalf of what, the American people, or on behalf of those certificates, we don't know. So I believe it'll be very hard to bring all that to the forefront without drawing attention and skepticism on who owns the gold, why are those certificates still sitting on the balance sheet of a privately held institution, and it's supposed to be Americans' money. So I think to try to revalue that will be very problematic, because it's going to cause a lot of questions, and a lot of people will probably be up in arms if they find out that, you know, we are holding the gold on behalf of those certificates that belong to the Federal Reserve. You know what I'm saying? So that's a long-winded answer. It's saying that what is the real price? We're going to find out, but it's going to be led by China and India more likely than the U.S., because the U.S. don't want anything to do with talking about gold ever again if they don't have to, because who owns it is the real question. And man, I'm mad I can't find my book, because I know.
I'm just wondering, like, it would seem more beneficial and advantageous to us. Gotcha.
So this is the book that talks about the assets being on the Federal Reserve.
Boy, that guy Jim Rickards comes out with a book every 5 days, ladies and gentlemen.
100%.
Good God, where does it? And he was doing this before AI, so we can't blame it on AI. This guy was putting out books every 5 days before AI. So I'm just I just feel like it would be advantageous for us to have repriced it a long time ago, or is it a debt obligate? I don't get it, man.
So
it's strange to me.
Here's the thing, where I will find it very problematic for them to willingly reprice it, because by willingly repricing it, you're literally giving credence to the idea that it is of importance. And so as we've witnessed gold and silver fade out of monetary roles, we have transitioned to a paper and digital, world itself. So to now acknowledge that gold has value still, outside of what we talked about last time with the Basel III endgame, they are able to talk about it, but not the U.S., who wants to keep the Federal Reserve note, aka the dollar, as the world most utilized as well as recognizable monetary medium. And because that backs our debt is our currency. So to bring gold back in the equation, that means that they're going to have to restrain themselves from continuing to expand the monetary base, and that'll force them to talk about having to link gold back to the debt or the paper, and that's not a part of the equation. Because if we're solely supposed to go digital, why would we go backwards talking about a barbarous relic? You know what I'm saying? So you keep that out of the equation, focus on here and now, which is debt. How do we address the debt? We're going to go through a reset using digital distractions, I believe, as a part of that equation. And
I did the numbers on Fort Knox gold and our debt, right? Our debt is at 38 trillion. I didn't include New York vote though. I didn't think about that. So only Fort Knox, we would have to get to a gold price of $172,000 to equal our current debt, national debt, at 38 trillion or whatnot. And I was just going through a hypothetical scenario. If we if gold got really going crazy, it's at $100,000, even 50,000. We could sell half of our gold and clear out half of our debt.
Yeah, and that would be what I guess an average person / normal household would want to do, pay off debt.
Yeah.
But yet when debt has been the U.S.'s greatest asset, because the world has accepted it, while we've taken in real tangible goods, i.e. everything in our house say made in China, like you don't want to come up off that gold, I believe, because that then will once again put gold back in the spotlight as a necessary medium that the world would want to recognize. And what we're witnessing now, obviously, the BRICS nations and the global South, they all recognize gold and silver as money. But then again, the U.S. wants no part of that. So that's why they're not allowed to willingly talk about gold in a positive light because we would have to address issues that they don't want to open up those cans of worms. And that's why I'd be very hard pressed to believe that there's gold inside of Fort Knox or New York that belongs to us. I believe
Yeah,
a part of the liquidity.
Because the whole, I talked about that yesterday. The whole, remember, it was a big dog and pony show with Doge. They were supposed to do a live stream straight from Fort Knox. Orange Man was supposed to get up there and show and do all this. Elon was going to go.
Crickets. Right.
The Epstein files, you know, they threw something else in front of us and we forgot all about it.
Correct.
So it can't be all there.
So I would be surprised. I would be surprised if it's gone, because the question is, where has it gone to? I would imagine it's went out east because China has been participating in our foolishness for decades now, and along the way, if you look at some of the Chinese charts of their accumulation of gold since the .com bubble, when we first really kicked off the idea that we're going to run this into the ground by expanding the Fed's balance sheet, by creating currency because our government's going to borrow, and that paper was what they're going to flood the world with. If you look at those charts, it just incrementally goes up. And each crisis we have, there's a surge in gold that they accumulate. And that's just the World Gold Council taking inventory of what they know about. We don't really know what's in China because nothing goes in, nothing comes out, rather. So from the World Gold Council, they show us bars that just go up. And there's a spike at every crisis. So you got .com, great GFC, something happened in the mid 2015, 2016, 2020, and then here we are now. And so outside of what we know, it's becoming obvious now. Just look at the price of gold, but we don't know what they're holding. And I don't think the U.S. wants no smoke when it comes to actually having to open up your vault and show who really gonna set the rules, because we ain't got enough gold. And that's why they can't talk about gold that way, man.
Germany, we haven't given, bro. Think about this, Mike.
It's been
yeah. And then but the thing is, if I recall correctly, remember when Germany wanted it, right? We gave them a little bit, and then we went to Venezuela, right? And did something and took their right?
No. So Venezuela. Venezuela had their gold stored in London, and London confiscated it. And against international court order or something like that, whatever the gold was, because the dictator in Venezuela and the people, we don't approve of that, so we're going to keep your gold. And this was, I think, 2020, 2019-ish, I think, give or take. And so that was the Venezuelan gold, which is, and mind you, all these gold that is stored, they're relatively small, because when gold was priced at, was it $1,500 a day, it was very, very low. So the tonnage, it added up then, but now, it's 4 or 5 times, what it was worth then. So it makes more difference now. But they've been robbing these countries forever. So Libyan gold, Saddam's gold, all that gold went somewhere. And I'd imagine it went into the vaults in London, and then that was their way of suppressing the price. And as China demanded more and wanted more because of their gold frenzy, in order to pacify them, they probably sold some incrementally as their primary dealers so that the West could still send them debt. And so, we'll send you debt, we'll discount the gold to you, so we'll be happy, you be happy, you accumulate, and we'll deal with the madness later on, which is right now, I believe. Because the madness is right now with all the gold going the way it's going.
Look at this. Huge breaking news. Major government mint is shutting down silver sales in the next 24 hours. We are not at liberty to disclose the mint by request, as it has not yet been publicly disclosed, but a major supply side shock is about to hit the silver market. And this was yesterday at 1 p.m. Almost 2 o'clock. So I'm just wondering, if this is the case, why would it be slammed down?
So I saw, before Silver Trade posted this, I saw another YouTuber or somebody mention this as well, as, once again, speculation. And I always tell people, when you hear about it on social media, more than likely, take it with a grain of salt.
Right.
Two or three different sources to verify before you start standing on it without giving a disclaimer.
Right.
So once again, it doesn't surprise me if that was the case, because I know that, especially with the United States Mint, they are contractually obligated to make sure that there's always available silver and gold product for the American public. But that is only valid as long as there's an abundance of actual metals to make the coins to then sell to the public. And as we get out of this selling a commodity for that illusion, it's going to be a lot harder for a lot of these governments to live up to their contractual obligations with their public. So to have a mint go down doesn't surprise me. Like I mentioned in a rant a while ago about the United States mint. Once again, if the price keeps moving the way that it does, they will not be able to supply the American people because they will not be able to secure enough of it at a reasonable price that wouldn't spook people to go trying to buy even more ahead of time. And so there's going to be a big issue with their ability to deliver because, once again, put yourself in a mint position. If you buy, how many ever tonnage for $100 an ounce, but then next week is 150, you're making the coins now to send out, but a week after that it's 200. You just lost out potentially on what you're going to sell moving forward. So you got at some point you're going to say, no, what, let's pause this, and then when that pause happens, it's going to turn into 1 week, a month, and there's going to be an announcement. The Treasury, Scott Bessent, unfortunately, due to demand, the United States Mint will no longer be able to, disperse gold and silver to the people. We apologize, but due to the market conditions led to us by China and Russia, we can't.
So they got to blame China and Russia. That's the playbook. Somehow.
So if whatever mint that is, it's good to say it's gonna be more. So just it wouldn't surprise me.
Let's take a look at some AI humor. Tom Lee. The odds of Tom Lee fleeing the country by January 30th surges to 81% on Polymarket. Oh man, and this guy Tom Lee, man, he predicted $7,000 to $9,000 Ethereum by end of January 26. Let's listen to this clip.
So
really
we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter. So we think
I've never seen, Mike, somebody be so wrong about everything. Stocks, crypto, everything, bro. He's worse than Jim Cramer.
I don't understand. One different with him is he's actually putting his company's money where his mouth is, though.
Yes, he is. You're right.
Accumulating Ethereum in droves in comparison to Saylor. So between him and Saylor, they either know something.
Who's going to crash out first, ladies and gentlemen? Drop a 1 in the chat if you think Saylor's going to crash out first. Drop a 2 if you think Tom Lee is going to kick the bucket first. It's getting rough out there, man. Someone asked for a wellness check on Michael Saylor yesterday. How do you feel about that whole situation?
Man, once again, I have looked into Michael Saylor's past, going back to .com with how he positioned his company, and he's not afraid to bet it big.
No, he's not
afraid to bet it big. And once again, from Tom Lee and Michael Saylor, they're both, as I think about it, we have their public persona of who they are as representatives of their companies. But then on the personal side, their entire financial portfolios can look entirely different. Because when you're playing with other people's funds, it's all a corporate, issue. So if MicroStrategy as a company crashes, they lose all the funds that they brought in, all the 4 or 5 different dividend paying products they created. If that goes to zero, you just chalk it up. You lose your business, you might be depressed, whatever. But on the personal side, Michael Saylor could be sitting on 1,000 tons of gold and silver himself that he never going to talk about because it'll counter his Bitcoin facade. And then on his Bitcoin holders, it's good to say he could take those L's, but if you got gold and silver to reinsure all that, he's still going to be in the Billionaire Boys Club. And I believe he's not dumb. He's well diversified because outside of helping this digital Western illusion promote this propaganda of this reset via digital products and services with all the stuff that's been created on Bitcoin since then, he's not dumb and not realizing that gold and silver is a good insurance policy to have against all this digital stuff, government debt, and your currency. And then on top of that, he got real estate portfolios, and he got houses across the world and all the tangible wealth. So he's going to be fine. But the people who invest in his companies thinking that he's going to make them all rich, those are the people that, I will kind of feel for them. And so,
I don't feel for him. I don't feel for him at all, because it just doesn't make any sense, Mike, to go buy a company that has the thing that you want.
Makes sense.
Just buy the thing that, and it's not like it's a gold. There's a physical thing here going on.
Right.
Bitcoin is digital, so
Right.
you can own it in your own wallets.
Right. But
very strange.
I believe a lot of this
psyop operation. If you ask me, it's a psyop.
A lot of this has transitioned along with the narrative surrounding what Bitcoin was sold as, what it evolved into, and what it is now. And it's all predicated around the next stages of propaganda that have been spewed out that the people have bought. And so this plays into another book. I showed this last time, but in this book called Propaganda, it talks about how all it takes is a simple idea is being propagated by a higher echelon of people to then become a common narrative that small fries adapt to and then run with that same narrative. And it's a self-feeding loop that it don't take much to get people to believe in some things, especially if you're down and out and desperate, meaning that, everybody talk about our currency, the dollars, this, whatever. Bitcoin will save you from that. And here's the biggest lie I'm finding out now. The die, borrow, and repeat model. Every maximalist is out here now talking about don't sell your Bitcoin. Just borrow against it and buy assets and then take out an insurance policy on yourself, and then when you die, it'll pay off the debt, and then you can pass the Bitcoin on to your kids. And that model works for the uber wealthy with real tangible world assets. It's never been proven to work with digital distractions of nothingness. But the fact that all these mainstream Bitcoin maximums are pumping that stuff, it only entices people to go buy Bitcoin and get exposure, because if you are told to hold it, never sell it, if everybody's holding it, you would think the price would rise, and it did rise until a certain point. And when it stopped rising as a result of accumulation, that's when I believe it was captured by Wall Street with all the institutions behind the scene that literally control the price setting mechanisms, i.e. Coinbase, Gemini, Kraken, all the people.
Well, here's my thing. It's Bitcoin suffers from the same thing that other assets like even gold and silver suffer from. It's the greatest fool theory.
Mm-hmm.
I mean, it's just part of reality. Even with you look at I can almost say this with real estate as well. Even although real estate, having a home or a roof over your head is more of a necessity than a want. So I guess I'll just narrow it down to just precious metals and like Bitcoin and crypto, and even stocks that don't pay a dividend, in my opinion. It's all a greatest fool's theory. You need someone else to buy at a higher price than what you bought, and you got to get out at some point to win. Zero-sum game.
Now, I would say in normal times, you can lump gold and silver into that equation when it was literally just a commodity. But now, as it's transitioned into money or a globally recognized store of value, it's not necessarily a greater fool, because you can want it all you want, but then the supply is not readily available. So the price you're going to pay is going to go up whether you buy it or not. So if you don't buy gold and silver, it's okay, because of the demand globally from 8 billion plus people as they recognize it as money. It's going to feed on itself to where the price will have to go up, because in order to get rid of it, somebody's going to want a lot more than what it is now. And so the difference, so that's my whole spiel about the physical world. It's a physical something that is being recognized as money. And if that is true, then once again, Bitcoin and gold and silver has not changed. It's just how we price it and what we price it in. That's changing. And so that right there makes it very challenging to say that, it's one of the things that feeds on itself in that regard there. But yeah, and then of course, housing, I think Barbara Kiyosaki said it best. Housing it's not necessarily an asset; it's a liability until it makes money for you. So,
Absolutely. I'm a firm believer in that as well. The house you live in is a complete freaking liability. Gold and silver tumble as Trump Fed chair pick Warsh. Warsh. Yeah, so this guy Warsh is going to be the guy that takes Jerome Powell's position. I'm not really, these headlines and these news outlets, they got to put something on everything. They got to give a reason for everything, right? Every crash or every pop. I can't, and you let me know, how do you feel about this? Do you think this really was the catalyst for silver and gold drop today?
no, not at all.
Overnight?
Not at all. And so I
Yeah,
mentioned
I didn't
that
think so.
this Warsh situation, literally yesterday during a press conference, Donald Trump said that he kind of has an idea as to who he's going to pick. He's going to announce it next week. All of a sudden, it leaked. It leaked today. At the same time, we're seeing a coordinated event and a variety of other things. And of course, gold and silver is being focused on here. But then again, it didn't mention nothing about the Crimex and the fact that margins were hyped, according to what was also shared. And so the narrative now is that Warsh.
Oh, they hiked margins again?
So according to what I just saw a moment ago and ranted about, it looked as if that is the case. And I asked Grok the way that you did, and it confirmed it. And so margins with the Crimex now, it went from I think 11,
Oh, I didn't know that.
to now it's telling us $52,000. And so if that is true,
I thought it went to. I thought the Marrex went from nominal dollar amounts to percentages.
it equates to I
Last week.
read 11%, which equals in dollars
Oh,
52,000.
okay, got you. 11% now.
And so
I didn't
if that
know
is
that.
true, I haven't seen that fly across CNBC or Fox yet. But why would they not
see.
want to tell us that? So literally,
Right,
if
right.
that is true, that is what is causing a lot of this spooking of the silver and gold as the smaller players are eliminated. And so, let me. I'll send you.
I'm searching now on Grok to see if this is the case. It says it was most recent change for precious metals like silver was announced on January 27th in the CME advisory notice. It raised margin on COMEX silver, platinum, palladium from 9% to 11%. I didn't even know this, Mike.
So I just sent you a link.
So that was on Tuesday, though. Let me see here. What you got?
So this is the question. This is the person who asked if
Oh,
the
okay, I see
information that I saw was initially true. And then if you probably scroll up from there, or let me see if you can go back, it'll take you to the primary post that I saw this morning that hinted at this stuff, which it doesn't get no airplay. But then we saw the headline you just showed us.
Wow. So then you did a query on that, or someone didn't. Free margin. Oh, so they so they did it. Yet they announced it Tuesday.
So that was Wednesday.
Tuesday, and it went into effect Wednesday.
Correct. And so that could
And
have
so
been the
we
reason why
kind of got the
yesterday-
smackdown last night.
Yeah. Or
Gotcha.
even heading into yesterday morning,
Yeah.
between 10 a.m. and 11 a.m. when the price dropped, that 1.8 trillion in gold disappeared and 8% in silver.
Yeah,
This
that's
is a
what
result
it
of some of
is,
it.
bro. Oh my God, I can't believe nobody said anything, Mike. I didn't see any news headlines about that.
Yep.
And I just talked about it. I said now we should not have to have an increase in margins because they earlier in the month they switched it from a nominal dollar to percentage. I said now as a percentage we should be good unless they increase the percentage, and that's exactly what they did. They went from 9 to 11. They're gonna keep going. In a minute you're gonna have to have 100%. It's not gonna be any futures collect. You're gonna have to have 100%.
And then at that point, there's no more of a game of playing futures anymore because the whole idea of futures is to bet on the future price. But if it's that much required now, you're focused on today, not the future. So who's leading this is the question. You know what I'm saying? That's what I'm curious to find out. Who's leading this charge? And clearly it's physical. It's not paper.
Wow, man, that's amazing. Learned something I did not know today, this morning. We have COMEX increasing margin recs from 9% to 11%, ladies and gentlemen, and it's going to keep going up. Now that they've changed it because the whole premise from them going to a percentage basis is that they didn't have to change it anymore. So if you're just going to keep increasing the percentage now, yeah, they're going to keep going, Mike. They're going to go to 15%, 20%, 30%. They're just going to keep going up and just keep trying to suppress the price. So this is exactly why the price has dropped. There's no more questioning.
And so watch this. So as all the smaller hands are shaking out of this, you're going to be left with the big boys at the table. And the big boys are the globally systemic important banks that have been in charge of manipulating metals from day one. And so, once again, the physical world hasn't changed. The supply hasn't been increased, but how they go about setting that price has. And that's going to be a real difference maker in the days ahead, because I can see greater surges faster now because of the increased demand, and the supply is getting tighter and tighter, boy. Because ain't nothing in them vaults in LBMA and Crimex. They got dust. They're sitting on dust in them vaults now. So, yeah. Wow. So I did a rant yesterday, man, talking about how I can see $100 days in silver a lot sooner than we saw the incremental increase from that. Was it $30, $40 last time I checked to $100 like that? What, a couple months or a couple weeks ish? Think about how fast 100 could come. So we go 100 today, 200 to 3 to 4 to 5. Like, and that's spooky because I don't know what the world gonna look like around us.
Exactly. I'm concerned even at these levels, at this pace that we've seen since November. I'm like, what the hell is going on? Either the Anunnaki coming back, or we we got war on the way. Something, man. Something.
And it doesn't help that for whatever reason, this administration is hard pressed on making sure Iran doesn't do what? Like, so once again, if the thought of a bomb dropping, and it takes 500 ounces per bomb, they got an inventory of bombs, but if this is a prolonged event, they're gonna need bombs. So we're still gonna go there. Like, so
wow.
Yeah, man, it's gonna get crazy, boy.
Well, Mike, man, it's been a pleasure getting you to come on and update us with what's going on in the precious metal industry, markets. Let people know where they can find you and your videos. You got a couple YouTube channels now, like the AI Asians, the Asian intelligence.
Trying to diversify myself for more audience, because there's millions of people need this, but unfortunately the algorithms do not notify the right people. So I got to try to find new audiences. But Rethinking the Dollar is where you can go. That's where the primary videos that I put out will be at. So Rethinking the Dollar on Rumble or YouTube, check it out. I try to stay up to date as best I can, even though stuff happens all the time.
There you go. Well, Mike, it's been a pleasure. Appreciate you coming on, man, and we'll have to do it again. And we're going to be doing some live stuff in the summer. I can't do it. It's cold. It's too cold right now. We're going to stay inside. But spring, summer, you'll see Mike and I do some in-person IRL events here in the D. So make sure you guys, we'll give you updates on all of that when we get that together.
For sure. Appreciate you, man.
All right, man. Thanks a lot. All right, ladies and gents, it is that time, man. We're wrapping up. Appreciate everyone for tuning in. Hit the like button if you're new. Subscribe to the channel. Yeah, that was a lot, man. That was some great information. Hopefully you guys learned something from it today. I definitely learned some new information about the gold market. Let's talk about crypto really quickly. We got Bitcoin. Ooh, we're taking a tumble. We rumbling in the jungling, baby. Let me see. Let me pull this up really quickly. Coin market cap. We have Bitcoin down 3% today. Ethereum down 4.7%. At its lows, I don't know if this is this might not have been. I know yesterday it was down 7%. Let's take a look at the charts though. I want to show the charts really quickly. Take a look at the Mind to Satoshi chart so you guys see where Elmo is. Look at Elmo. Look at Elmo waiting for us. He's down there waiting to just consume all of you in fire and brimstone. we've got a situation here, ladies and gents. I told you we were going to head lower. We were bouncing off that trend line. We've gone below it a little bit. Now we're hovering around it. Bulls are trying to keep this bad boy above this downward trend line. However, the issue is we've already breached the upward trend line, the light green trend line. We've breached that. That is a technical break. So now that becomes resistance. So we've even today we've tried to head back up a little bit towards that trend line, upward trend line, with some rejection on the 1 hour. But it is not looking good, and targets for 73,000 still look like to be in play. AI Griff Sal start buying in June of this year. So that's where we are. I want to show you Scalpalytics Pro on the silver contracts, boy. Look at that. I wish I had my soundboard working. This thing is going crazy. Can't get it to fire up. But look at that. Went short this morning at 9 o'clock with Bloodalytics. Again, bloodalytics.com. Link is in the description below. Check that out. And actually, let me bring this up like this. Let's do it this way, ladies and gents. There we go. Bloodalytics.com. Look at this here, man. You can actually get this parameter extension after you sign up for one of the Scalpalytics Pro signals. You can then purchase the one-time purchase of the silvers, which I actually keep this up to date for you. So any updated parameters you'll get with that. But man, look at that silver play right there. Caught all of this, and it's dumping, y'all. $91. And you know, people are like, oh, look, it's over. Well, yeah, damn, they increased the margin requirements yet again, percentage now. So think about it. Increasing margin requirements from a nominal dollar amount is different than increasing it from a percentage amount. A percentage amount increase has much more of an impact on nominally, right? So an increase from 9 to 11% is actually a pretty big increase. Pretty big increase. So it will bounce back though. It will bounce back because the demand is still there. They need physical delivery. People need physical delivery. This is not a paper game. They're trying to make it a paper game. It's not. Shanghai has showed us this is not a paper game. There's real demand, physical demand for these precious metals right now. Whether it's to hedge against what's going on over here in the States, or if they actually need it for their next gen battery technology, weaponry. It's a number of reasons to have this silver, and I think that's why it will continue to head higher. Very disappointed in Bitcoin. I think that we have a situation on our hands where a lot of people are caught with their pants down in the precious metals world, and they have to cover by selling something that is of more risk in their portfolio. They're selling crypto. But we may get a bounce. We may get a bounce here because we are above this trend line. We're trying to stay above it, so we actually might get a bounce on crypto at these levels. We shall see. It's trending in a very tight range right now. This is insane. We'll see what the breakout happens, either up or down. We'll have to see what happens there. Bloodalytics and WeX. Check us out. Deposit $100. I'll put the QR code on the screen and get $50 to trade additionally. All right. Yeah, man, we're getting slammed. Again, it's all because they've increased margin requirements. I didn't even realize that. I don't know if you guys did either. Shout out to Mike for giving us this new link, metalcharts.org. And I'm going to start using this as a reference in real time. We'll see what the spreads look like. Look, spread has gone up an inch, a tick. 31 63 is the premium now. Almost 34, almost 35% spread. Unsustainable behavior. Unsustainable. Be grateful for the sale and buy the dip. Yeah, of course. If you're buying physical, it doesn't matter if it goes down 30%. That's not even enough for you to make a move because of the premiums and everything. Right? So this doesn't really mean this is a spot. This is all spooking the spot traders. That has nothing to do with us who have bought physical. If they watch blood, they would be okay. Amen. Amen. Round of applause to that. Yep. Thanks, Mike, for that. And then lastly, I just want to take a look at what we have for Bitcoin being down right now, currently for the year, 3.4%. So we're just watching that. I've told you guys multiple times, I think we go lower before we go higher. And end the year in the green for Bitcoin. Definitely think that's going to happen. And of course, we got to watch our buddy old pal, Michael Saylor. MNAV is at 1.05 right now. Currently unchanged. Let's do a refresh just to make sure that is the current. Yep, we're unchanged for the day. I did see a dip as low as 1.03, I believe, earlier this morning or yesterday. I'm surprised that MicroStrategy is up today. That's insane. Like, what are you up for? That's crazy, right? Maybe the stock market has to be. Oh, the stock market is not up. That's strange. Very strange to see Michael Saylor's strategy up today. Very strange. But we're red across the board. Dow Jones tumbles 500 points as Apple shares decline. Speculative silver trades unwind. Why is Shanghai so different in price? Because of their export restrictions. They have export restrictions on Shanghai or coming out of China, period. So you can't just export silver from China. You have to be a certain size and get a clearance, and so that's why that is. We see a little bit of a premium on, not even a little bit, a 35% premium on the price of silver. If there were no export restrictions, I think it would still probably be a little bit higher, at least 10%, 20, 15%. I would say 10 to 15% premium. I would say on the price of silver versus COMEX. Again, go follow Rethinking the Dollar, my guy Mike. That was an excellent stream. Always love having him on. And that's pretty much it for today, guys. Again, Bloodalytics.com. That's where you need to be to navigate these markets. I didn't even show us what's going on with the Scalpalytics Pro today. We really haven't had much activity other than we have had some trade activity on Ethereum, but Ethereum's been in a really tight range ever since our short that was initiated all the way back on Wednesday. We went short, and boy, look at those gains right there. I don't have my soundboard, but look from the short on Wednesday after the FOMC. I kind of warned not to trade until after FOMC was done, and sure enough, you would have gotten a nice trick right around 3:30 to go short on Ethereum using the powerful Bloodalytics Scalpalytics Pro tool available on TradingView. So we've been in a tight range since. We'll have to see what happens here for the rest of the day. But Ben Frank in the house. AppMex order currently out of delivery. Yeah, I know, man. Am I dropping frames? Let me know. But that's it, man. That's it for today. Again, appreciate each and every one of you. Hit that like button, subscribe, And I'll probably be doing some more content over on the Red Nugent later today. That's it, guys. I'll check y'all later.
Stacking my coin, stacking my coin, stacking my coin, stacking my coin, Bitcoin, Litecoin, Ethereum, cash, Bitcoin, Litecoin, Ethereum, cash, stacking my coin, stacking my coin, stacking my coin, stacking my coin, Bitcoin, Litecoin, Ethereum, cash, Bitcoin, Litecoin, Ethereum, cash. Since I was born, been stacking my coin. These niggas pop, my money keep growing. Your girl is a dot, she all on my groin. She blowing my horn, we fuck like porn. These rappers is whack, they lyrics is corn. I'm getting this money, they never get born. I'm loading my strap, they calling law. Fuck around and you clap for running your jaw. If it ain't about the dollars and it don't make sense. Got me sipping brown water, but it ain't from Flint. Trying to chase all this bread, though the shit won't last. About to shut the city down like a crypto crash.
Fuck it. Do it live. I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Okay.